Singapore's hotel supply growth remains capped at 1.3% annually as marquee events continue lifting occupancy and sharpening investor appetite for hospitality assets. To break down these developments, we have here Irvin Xiao of JLL and Wong Shanyang of Cushman and Wakefield. Glad you could both join us, Irvin and Sanyang. So, what is happening in Singapore's hotel investment market as supply growth remains tight?
So I think from investor perspective, right? So limited supply, right, does continue to underpin investment prospects in the sector, right? And also I would say this is also further reinforced by what we are seeing in the Middle East, contributed to higher energy prices and also consequently potentially higher construction and development costs. So these factors, right, they are likely to constrain future development visibility, right, and also potentially tighten the medium-term supply pipeline, right. So really against this backdrop, so I think there's really good investor interest, right, especially particularly for asset enhancement and repositioning strategies. Occupancy is fairly good right now. We look at RevPAR and ADR, that also continues to be really high compared to pre-pandemic levels, right? So investors are really looking for assets, that can be repositioned efficiently, right? Given the potentially higher development costs. Investors, there are some of them, they are converting suitable assets, hotels or what, into co-living, where also where value can be unlocked, right, through creating a space, right, or enhancing service offerings, via technology and leveraging operating and retail partnerships.
From a macro perspective as well, is that there have been quite a favorable interest rate environment in the past couple of years, and even looking forwards. And I think hospitality has some natural inflation hedging characteristics where every day the rate can change. So depending on the pricing power of the hotel itself.
But would you say investors are becoming more aggressive in acquiring hospitality assets?
Instead of aggressive, right, we are seeing more of his conviction, where we see market conditions being more conducive, like Senya mentioned, RevPAR, occupancies, and we see a lot more capital coming to the table. But nonetheless, investors do come forward in a very disciplined manner with very careful underwriting around the asset and operator quality, as well as where the asset is located.
I agree. Like for hotels, I think that the yields are still about 4 to 5%. So that also remains, very attractive for investors looking for higher yield, right? Because if you compare this to, say, offices, where the yields are lower, about 2 to 3%. So in terms of, the cash-on-cash returns, right?
And which specific types of hotel assets are attracting the most interest right now?
I think we've seen interest for Singapore, right? So I think it's really about the optionality that an asset has, right? In terms of the repositioning potential, right? And I think like what Irvin has mentioned earlier, right? For hotels, right, they have the flexibility in terms to adjust pricing, right? When demand is up, I would say the assets that are probably the most attractive to investors are those that are able to appeal to multiple consumer profiles. Like, for example, short-term stays from tourists, right? But also at the same time, reposition to co-living.
Just to add on as well to what Sian Yang mentioned, we do see that actually interest has been quite broad because of the very conducive market conditions, right? And there's interest in different types of assets, which really reflects the depth of the market in Singapore. So like things like irreplaceable trophy assets in core locations, continue to appeal to family offices, high net worths who are looking for wealth preservations. And some examples of these would be like the Duxton Reserve and 21 Carpenter. Value-add investors would be drawn to things like repositioning plays, a bit like what Sian Yang mentioned, like the Park Avenue Changi, and is being converted to co-living use.
So let's say for major events like Formula One, how are these affecting hotel occupancy and investor demand?
So I think it's good that we have all these major events, and it's important, but these events are on for, say, maybe 3 to 4 nights out of 365 nights a year. Alone, things like F1, it doesn't move the needle materially on an annual basis. But I think what really helps is that Singapore has that breadth of the events calendar, covering things like concerts, meetings, sports and cultural events that create a very diversified demand that's not so easy to disrupt.
I largely agree. These events are important, right? Especially to bolster, Singapore's appeal as a regional tourism destination. I think we do see, increased RevPAR for hotels. I think it's coming about 17 to 18% higher than, the monthly average for the whole year.
Now, looking at it from the perspective of hotel owners, are they seeing stronger pricing power because of limited new supply?
So in terms of pricing power, it's really a function of both demand and supply, right? Supply is constrained, right? As you mentioned, but we also would really need to look at the demand side of things as well, where there could be some near-term headwinds. This could stem from, say, potentially higher airfares and also a more cautious travel environment, right? And also, I think what Irvin mentioned earlier, right? Look at what happened post-pandemic, right? Operating costs were rising, labor costs were rising, but hotel operators were largely able to pass on these increases, right, in terms of pricing to consumers. So this really underscores the pricing power of hotel owners or operators in the supply constrained market.
Yeah, I think Sian Yang hit the nail on the head, right? I do see fairly strong demand for year-to-date performance. We're still up both on the occupancy and the rate perspective. I think we are probably close to the point where hotel owners need to think about investing in their assets as well in order to justify the higher rates. So like, a $200 hotel 3-4 years ago is probably now a $220, $240 hotel in terms of rate.
So let's say if we compare it to everyone else, how does Singapore's hotel market compare with other hospitality markets, let's say in the region?
Singapore remains one of the strongest performing market in the region, with some of the highest occupancies, highest room rates, highest proportion of non-domestic guests compared to our peers. I think that create a resilient demand profile.
Yeah, Singapore, in terms of travel destination, I think the prospects is still long-term prospects. I would just say, maybe to Vince's point earlier also, hotel owners need to think about reinvesting into their products, especially when Singapore is a high-cost destination. There is a lot of investment going in, right? The event-wise and also in terms of the infrastructure. So, yeah, I would say, there really needs to be continued.
And of course, as subject experts, we value your thoughts on this. So if you have recommendations, what industry developments should investors watch out for heading into 2026?
I would say the key thing to watch is really the interest rate environment. I think right now expectations are also for rates to stay broadly stable. But if we do see uncertainty in terms of investment activities, that will take on a more cautious tone. Unexpected global economic downturn, and consequently prolonged weakness in the travel demand. Yeah. But that said, I think over the long term, I think the outlook for Singapore's hospitality sector remains quite positive, right? And it's really underpinned by structurally tight supply.
And I think from our end, we do want investors to look out for. Number one would be, as Sian Yang alluded to, shifting travel patterns. When we speak to general managers in hotels, they tell us that they do see quite a bit of regional travelers who are substituting their long-haul travel. And we think that that's a positive for Singapore, both as a destination in itself, as well as a transit hub. Secondly, it's also Singapore's positioning as a premium destination. We think that this will be have some sort of natural filtering, where that mix of arrivals to Singapore gets skewed a little bit more towards the high spending visitor. So overall, we think that this should be seen as a high quality sort of demand story rather than sort of a volume play when they look at hospitality investments.
Thank you so much for sharing your thoughts, Irvin and Sian Yang. Hope you can both join us again soon.
Okay, thank you.
Once again, those were Irvin Xiao, Vice President of Advisory and Asset Management at JLL's Hotels and Hospitality Group, and Wong Sian Yang, Head of Research for Singapore and Southeast Asia at Cushman & Wakefield. For more news, visit sbr.com.sg.